Money FM 89.3, the best of the afternoon update. The afternoon update with Lynlee Foo.
Good afternoon, you're with me, Lynlee, on Industry Insight. Now, in part one of our Japan special, we looked at how institutional capital is flowing back into Japan's hospitality sector, driven by long-stay formats, lifestyle-led models, and renewed investor interest in cities beyond Tokyo. Today, we flip the lens and explore how individual Singaporean investors are tapping into the same trends, particularly through boutique B&B opportunities in high-growth cities like Osaka. One standout case, Metro City Osaka, a freehold, fully managed B&B development in Naniwa Ward. Over one launch weekend in Singapore, 60% of the units were snapped up, a clear signal that investor appetite for Japanese real estate is not just back, but evolving. I'm Lynlee, and with me today is Ruben Koh, Senior Director and Head of International Residential Sales at Savills Singapore, to walk us through the drivers behind this demand and where interest is heading next. Ruben, welcome to the show.
Hello, Lynlee. Thanks for the invite.
Let's start with that headline success. Well, 60% of the Metro City Osaka units allocated to Singapore sold out within the launch weekend. That is just remarkable. What do you think drove that level of demand?
Okay, so I believe actually that, during COVID period, we had a lockdown and we couldn't really travel. So with the opening up of the borders and, with the global travelers actually traveling to their holiday destinations, Japan happened to be one of the most traveled countries after COVID. So what actually happened was that the Japanese government and the Osaka governors, what they were doing was that they were actually trying to boost up the economy for Osaka. As we all know that Osaka itself is actually the second largest economic city in Japan. So with the integrated IR resort that's actually coming with the current World Expo 2025 that should be ending in the next 1-2 months. And that actually created the whole tourism recovery for Osaka.
Okay. And just to take a step back, Japan has always been on the radar, right? But interest from retail investors here in Singapore seems to have surged recently. Why do you think we're seeing this momentum now, especially around Osaka? Do you think it's just to do with the World Expo 2025 or there's more to it?
That's one of the reasons why, but our belief here is actually because of the weak yen versus the Sing dollar and the low interest rates. I mean, probably if you look at it last year, almost every country in the world is at high interest rate levels. Only Japan at ultra low interest rates. Of course, they're rising now for the Japanese yen, but it's still relatively low compared to the rest of the world. So that's actually, I think, one of the main key drivers why Japan's actually on the radar now.
Okay, are investors also asking about other cities, or is Osaka still the clear front runner?
It's always been Tokyo and then Osaka, and probably a new upcoming city would be actually Fukuoka. So yeah, if you actually look at it in that sequence, why Osaka is actually up and coming now is actually because Tokyo has got too expensive. So Osaka was actually the next recipient for investors because, the entry price is still relatively affordable compared to Tokyo. And you because of the lower entry price, you get a bigger bang for your buck.
Okay. Let's talk about the asset class itself. Okay, Metro City Osaka is a licensed B&B, short-term stay ready, fully refurbished, if I'm not wrong, and comes with end-to-end management by the developer. So what is it about this model that resonates so strongly with Singapore investors? Okay,
so we all do know that retail investors always look up to the institutional investors, especially when it comes to hospitality. So that's where, the Airbnb concept actually came about. So in Japan, where Airbnb is actually allowed, a retail investor can actually get on the Airbnb ladder themselves by buying a single unit and, refurbishing or renovating the unit and then managing on their own. But we all do know that as it all looks so rosy and nice from the outside, but the management of the units, especially an Airbnb unit, can be quite a hassle. So what the developer offers in a way of an opco is that they will take over the whole entire management and manage it for the investors.
Okay. That plug-and-play proposition, I think it's quite compelling, especially for those who want exposure to Japan's tourism boom, but don't want to deal with operations or local complexity. I also understand investors were offered a fixed interest return during the renovation phase. That kind of certainty, I think, would have helped close many deals.
Indeed, it actually has. Investors, we're always looking at, what's the yield on our return. So that actually helped us to, secure a lot more deals on the table.
And talking about deals, I want to go into the profile of the buyers. Who's actually buying into these units, Ruben? Are we talking about seasoned property investors, or are you seeing a newer demographic come in?
For Metro City itself, we actually saw a new breed of investors. Basically, these people, they're not looking at the much higher entry prices, but they're looking at the lower entry prices. Why? Because we look at it as a form of either buying a bond or a T-bill from the government. I do understand that the bonds and the T-bill, they are a lot more secured, inverted commas, because it's actually by the government. But looking at it now with the interest rates actually, especially the Singapore interest rates for fixed deposits, for the treasury bills, even for bonds have actually been dropping. The investors who have actually unlocked some of these deposits and have actually matured, they're actually putting into such an investment here.
Okay. I wanted to talk about the pricing for the Metro City Osaka.
So, most investors actually, when they go into a fixed D, it's either in a form of a 100,000 or 200,000 range, especially for the T-bills as well, with the more affluent or even mass market investors. They tend to go in to that bite-sized amount. So with that amount actually maturing, putting it into Metro City, which starts at about, I think it's about 120,000 Singapore dollars, all the way up to about 150, that actually bodes well.
So how much per square foot?
Okay, in Japan, we don't really look at per square foot because the unit sizes are actually pretty small. It's general knowledge in that area. So, if you're looking at it in per square foot, probably about 700 Singapore dollars per square foot, but you're actually looking at it as a quantum basis.
Right.
Entry basis.
And with that kind of pricing, what kind of yields can investors expect?
So for most Airbnb, or we call it the Minpaku licensed properties in Japan, for Osaka, we should be able to achieve, or it's actually achieved today, anywhere between 12 to 15% on your cash. And then once you net off all your costs, you'll be looking very close to 8%.
Wow, okay. So that's quite interesting. It's not really just for the ultra wealthy, the relatively low price points, and the hands-free model seem to be making this very accessible to younger investors and families entering the overseas market for the first time. Huh?
Yes.
Ruben, let's talk about risks. No investment is without risks, especially when it involves cross-border ownership and short-term rental regulation. So what are some of the key things Singapore buyers need to be aware of before investing in B&B units in Japan?
So most investors will think that the Minpaku license actually, is similar throughout the whole entire Japan, but this is actually not the case. You want to be aware that every city has got its own set of Minpaku or B&B restrictions. So, for example, right, in Tokyo itself, you only allow 180 days of B&B lets, and only in certain wards. While in Osaka, you are able to actually rent out your entire apartment B&B style 365 days a year in everywhere in Osaka. So that actually gives you and allows you to actually drive up all your yields. On top of that, as an investor, you want to actually be buying a unit that you can actually convert from a B&B to a normal rental situation, to a local Japanese or to another foreigner. So you have to make sure that you have a balcony. That's what most Japanese and foreigners actually look for. The reason is because if we ever do get into another COVID situation or a medical situation, you want to have that little outdoor space just to ease the frustration of being cooped up within the four walls, right?
Yeah.
One more point is that for B&Bs, because of the yields, you're actually playing on the yields. Now, what you want to be doing is to look for properties that don't have too high a PSF. So you really got to weigh between the brand new developed apartments to be run as a B&B versus a existing apartment that you can actually renovate or refurbish to rent out as a B&B. The difference is actually in the cost because, like for example, if you know our Metro City, it starts about 120 to 150. Most older units actually don't really cross the 200,000 mark. But if you actually buy a new build, a new development, a new property, they can cost as high as 350 to 400,000.
Wow.
But the average daily rate actually doesn't really go up a lot. So when you actually, do your calculations, do your numbers, the yields are actually quite a lot lower than a refurbished apartment.
I
So
see.
that's why we went that route whereby we look for a developer that actually bought the units en bloc and then they renovated the units and then we sell it on to the retail investors at a much lower price.
I see. And I just wanted to ask, what about considerations like local tax obligations and also currency volatility? These sort of things can catch people off guard, right?
Yes. So unfortunately for Metro City itself, because of that low entry price, the local Japanese banks, like for example, Bank of China, that is actually based in Japan, they won't lend to such a low value property. So the investors actually have to come out with the full cash. What is actually mitigating it now is that with the weak yen, the chances of it actually falling too much more is a lot lower.
Okay.
In terms of taxation, actually, Japan itself is one of the lower tax countries in the world. So it's actually not that scary because there are actually a lot of allowances that the investor can actually offset off. And if they do go much bigger or they scale to a much bigger level, there are different company structures that they can actually look at to actually mitigate certain high taxes if there is any once it crosses a certain threshold. So only when you go really, big, like more than 10 units, that I actually see that the tax will actually escalate.
Well, I suppose having expert guidance like yourself and brokers on the ground really does make a difference when investing overseas, especially in a regulated environment like Japan. Ruben, what's next on the horizon? Are you seeing more Japan B&B projects coming to market? And how is investor appetite evolving?
In fact, B&B in Osaka was actually pretty popular already back slightly pre-COVID period. So, we're looking at the 2018-2019 period, but it was relatively not in high demand in terms of sales because it was a market that wasn't really, tested. But since then, we're looking at 6-7 years later, and with that, heightened tourism in Japan today or post-COVID, especially into Osaka because of the World Expo, there's actually been a shortage of hotel rooms, and therefore the B&B model actually was, really working very well. Now, what we actually want to do is that there's actually very little stock in the Japan market today. And what we at Savills here, what we're trying to do is also to assist certain high net worth individuals in Singapore to purchase blocks whereby they can actually renovate and retrofit as well. And then they can actually set up an opco just to run the B&B business as, like a 15 unit or 20 unit block. So that actually is one of the ways that we are actually going, because to be able to get developers to give us like 40 units or 50 units to sell strata, that's actually quite a difficult play in Japan. Now, with the dropping interest rates around the world today, even Singapore is not spared, and that has actually resulted in our fixed deposits, our bonds, our T-bills actually falling from all-time high of a 4-ish% now down to about the last I think it was 1.9%. It's not giving investors in Singapore or savers in Singapore a lot of meat. So therefore, what has actually happened is that they're looking for opportunities, and currently, B&B in Japan that's where the opportunity is. So investors are actually heading over there. It's just that we have very little supply, but a lot of demand. So that's why the prices are actually, slowly creeping up as well.
So are there any shifts in buyer preferences, like interest in different regions of Japan or demand for other formats, such as co-living, branded residences, or even hybrid hospitality models?
In Japan, B&B, we look at it as a short-term hospitality. That's a really up and coming sector in Osaka city itself. For co-living, it can be done, as I mentioned just now, with usually with the higher net worth investors, whereby we actually help them source and actually to acquire an older building where they can actually convert it, and they can either run it as a co-living or they run it as a B&B model. The B&B model currently is still, generating a lot more returns, and the mindset of co-living hasn't really caught into Japan yet. Not to my knowledge, but it may actually already be in progress. So one of the restrictions, one of the risks I was saying just now was about Tokyo, whereby they only allow 180 days. So a hybrid model, what we could actually advise investors as well is that if they still want to get on the Minpaku ladder, the B&B ladder, and they only want to buy in Tokyo because it's the number one city in Japan, what we can actually recommend is to get an older apartment, renovate or retrofit it, rent it out for 180 days for the Minpaku style, the B&B style, and then for the other 180 days to either go on a shorter term rental with foreigners, because the local Japanese, they will usually rent it on a longer term. So that usually will not bode well with the local Japanese, but you can actually rent it on the short-term travelers.
All right, Ruben, thanks so much for joining us today and for shedding light on how Singapore investors are riding Japan's real estate wave in a very new way, whether it's the fully managed B&B model or a shift toward income-generating overseas assets. I think it's clear that buyer sophistication is definitely growing and Japan looks set to stay in focus for some time. Thank you so much, Ruben.
Thank you, Lynlee. Have a good day.
Ruben Koh there, Senior Director and Head of International Residential Sales at Savills Singapore. And that wraps up part 2 of our Japan special here on Industry Insight. If you missed part 1, do check out our conversation with Jason Leong from Fraser's Hospitality, where we explored the institutional investment play into long-stay hospitality and emerging gateway cities. I'm Lynlee. Stay tuned to Money FM 89.3.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.